Welcome to Pro News Weekly. Let's dive into the latest updates on the financial markets. The dollar has found its footing, stock indices are retreating in the face of the Fed, gold has new competitors, and Bitcoin is on the verge of a correction. The US dollar has managed to recover, backed by the Middle East conflict. Until now, all the troubles for the global economy originated in America, from trade tariffs to the US fiscal problems that undermined confidence in the greenback and deprived its status as the main safe haven currency. However, as soon as the epicenter of turmoil shifted, everything changed. The Middle East conflict is about to make the US dollar great again. The stability of foreign investors' holdings of treasury bonds indicates continued interest in the American currency. While China was getting rid of treasuries in April, Japan and Britain were buying them. Rising oil prices are helping to shore up the USD index. As a result, the risks of inflation accelerating in the US and the chances of the Fed keeping interest rates high for a long time are increasing. Rumors are circulating on Forex that without de-escalation of the Israel-Iran conflict, the US dollar will not weaken significantly. At its June meeting, the Fed painted a stagflationary scenario. The central bank lowered its forecast for US GDP in 2025 from 1.7% to 1.4% and raised its inflation estimate from 2.7% to 3%. This scared the S&P 500 more than the war in the Middle East and the potential increase in tariffs after the end of the 90-day grace period. The broad stock index retreated but continues to trade close to record highs. Donald Trump is trying to support the US stock market. He is calling on the Fed to cut the federal funds rate by 1 to 2.5 percentage points. The US president claims to have already collected $88 billion from tariffs while inflation remains low. However, his criticism of Jerome Powell is more likely to scare investors than inspire them to buy. Markets are concerned about the White House's willingness to raise import duties after the 9th of July and the ongoing Israel-Iran conflict. According to RBC Capital Markets, if it drags on, the S&P 500 could fall by 20%. Deutsche Bank warns that a twofold increase in oil prices in the past has led to recessions in developed countries. Gold rallied 4% at the start of the Israel-Iran conflict due to a surge in demand for safe havens. However, the bulls' enthusiasm there has gradually waned. The precious metal is poised to record its 6th consecutive monthly gain, which is the longest winning streak in 2 decades. Its prices are close to record highs. All this suggests that it is overbought and that alternatives should be sought. Instead of gold, investors have started to buy platinum and silver. Prices for these metals are rising as their reserves are depleted, shortages occur, and demand from industry and jewelry remains high. The transfer of capital within the sector has forced gold back into a consolidation range of $3,100 to $3,400 per troy ounce. Gold has been hit by the Fed. In the updated forecasts, 7 FOMC officials do not expect a reduction in the federal funds rate in 2025, which supports bond yields. In March, there were only 4 such officials. This is bad news for precious metals that do not generate interest income. While Bitcoin is consolidating in the spot market, the futures market is signaling growing risks of a Bitcoin correction. Traders are hedging against the risk of a pullback to $100,000 and below against the backdrop of escalating geopolitical conflict. This significantly worsens global risk appetite and increases uncertainty in the Fed's monetary policy. Jerome Powell expects a significant acceleration in inflation in the U.S. This is not good news for U.S. stocks and income assets in general. The ratio between put and call options on Bitcoin on the Deribit cryptocurrency derivatives exchange jumped to 2.17 in one day. This signals high investor demand for protection. The news of Congress passing legislation on stablecoins failed to help the Bitcoin. The United States, led by the president, is confirming its loyalty to the crypto industry. Since Donald Trump's victory in the presidential election, Bitcoin has risen by 50%. Its future largely depends on developments in the Middle East. Escalation in the form of other countries getting involved and Iran blocking the Strait of Hormuz could lead to a further deterioration in global risk appetite and a rollback of the upward trend in the coin. The highlight of the last full week of June will be Jerome Powell's testimony before Congress. Investors would like to hear more details about the state of the U.S. economy and the outlook for monetary policy. However, the central bank does not know how and when the armed conflict in the Middle East will end, where Donald Trump's tariffs will stop, or how they will affect inflation. The Fed is moving in the shadows, and markets need to get used to this. a package of macro statistics in the form of data on business activity, orders for durable goods, the trade balance, and the personal consumption expenditure index will help clarify the situation with the U.S. economy. During the holiday season, low trading volumes could trigger serious fluctuations in U.S. stock indices. This will affect other financial markets. As the 90-day tariff delay expires, trade risks will increase. In theory, this should put pressure on the U.S. dollar. However, it is doubtful that the Israel-Iran conflict will end quickly. Geopolitics is supporting the USD index. Follow the updates on global markets in Pro News Weekly. Like, share, and subscribe.